Hello, and welcome to our webinar on retiring from the New Mexico Educational Retirement Board's Defined Benefit Plan. As we are all aware, this pandemic has changed the way business is conducted everywhere, ERB included. Of course, as so many changes during this time, our commitment to continue to provide the best services to our members involves more technology. We aim, however, not to use technology for technology's sake, but to use technology to increase participation, convenience, and knowledge. We bring to you today a webinar that, as fashioned, should help you prepare for retirement. Through this webinar, we hope to not only guide you through the retirement process, but also create a living history that you can reference and look back through to find answers to questions that you might have not thought of today. My name is Monica Lujan, the Director of Member Services, and with me I have 4 staff members: Shirley Rodriguez, an ERB Retirement Specialist; Laura Crawford, ERB's Employer Auditor; Selena Herrera, ERB's Payroll Specialist Lead; and Roderick Ventura, ERB's Deputy Director. Together, we will highlight important features of ERB's Defined Benefit Plan and ideally help you on your journey toward retirement. At the highest level, NMERB is a defined benefit retirement sponsor for 215 employers, including all New Mexico public schools, public charter schools, colleges, and universities. As an ERB member, both you and your employer have contributed a certain percentage towards your retirement, such that upon retirement, you are entitled to receive a monthly benefit for the remainder of your life, also known as a defined benefit. Through this presentation, we will do our best to wade through the rules governing the retirement process. But here is one main takeaway. You have earned a lifetime annual benefit, which you will receive for the remainder of your life. That benefit is a function of 3 main things: years of service, your final average salary, and a multiplier set by state statute. Without further ado, Shirley Rodriguez will start us off with our years of service.
Hi everyone, I'm Shirley Rodriguez and I'm going to go over years of service. So we have a couple of different things. We have our earned service credit. To receive earned service credit, there's 4 quarters in a year. So to get a quarterly credit, you do have to be working more than 0.25 FTE and at least 16 paid days required. We also have withdrawn service purchase that you can restore. So it's basic service that you've renewed on and now you want to purchase back to add to your time. And we also have sick leave that you can purchase, which is up to 1 year. We have allowed service purchase, which is 8 private school or universities that you worked at, out-of-state school purchase, and military service. We have our Tier 1 tier, which was hired by July 1st, 2010. That is 5 years and out, so it's 25 years of service at age. The rules that fall under it would be Rule of 75, which is your age plus your service credits equals 75. So if you reach that, you can definitely retire. There could be a permanent reduction if you're under the age of 60. And then there's 65 and 5, so age 65 with 5 years of service. We also have our Tier 2. So Tier 2 is anybody that was hired between July 1st, 2010 and June 30th, 2013. That one is 30 years of service. So 30 years of service with any age that you can retire. There's the rule of 80 that falls under that, which is age plus your earned service equals 80. With that one, there is a permanent reduction if under the age of 65. And then there's 65 and 5, which is age 65 and older with 5 years of service. When you'll receive, COLA is available at the age of 65. 65. Then we also have our Tier 3, which is anybody that was hired July 1st, 2013 to June 30th, 2019. That one is 30 years and out, so 30 years of service. With any age. There's the rule of 80 with that one, which is age plus service equals 80. With that one, again, there is a permanent reduction if you're under the age of 65. And then there's 67 and 5, so age 67 with 5 years of service. And again, COLA available on that at age 65. Then we have our new tier, which is our Tier 4, which is anybody that was hired July 1st, 2019 going forward. That one is 30 years and out, so 30 years of service. There's a permanent reduction on that if you're under the age of 58. Rule of 80, which is age plus service equals 80, and there's a permanent reduction on that if you're under the age of 65. And 67 and 5, so age 67 with at least 5 years of service. COLA on that is at age 67. With the tier 4, it is under a tiered multiplier. So depending on your years of service, depends on how it's tiered out. So 10 years or less is at 1.35%. 10.25 to 20 years is going to be at 2.35. 20.25 to 30 years of service is at 3.35. And 30.25 years of service and over is going to be at 2.4. That kind of goes over on how that one is done. Now I'm going to turn it over to Laura Crawford.
Hello, I'm Laura Crawford. I'm the LAU auditor with ERB. And now that Shirley has gone over the tiers, and because you all are watching this, we know that you're thinking about retirement. So some really important things before you actually make that decision. The first thing you'll want to do is, if you haven't already done this, is go on to our website and create your own My NMERB account. And so what this account's going to do, it'll link into all of your information. You can look at your service credit. You can, through your work history, you can use the purchase estimators, or you can run a benefit estimator. Now, the benefit estimator in your own account is great because you can use it and run as many estimates as you'd like to throughout your career. You can run it with different dates of retirement. You can run it with different beneficiaries. You can do that as much as you'd like to. Once you are within 1 year of eligibility, then you can go ahead and request a formal estimate. And so on our website, you'll see the forms button. And once you click that, you'll scroll down a list and pick up the estimate request form. And with that, what you're doing is you're requesting a formal estimate. You'll fill it all out. You'll fax or mail it in to the address in the top right corner, which is the Albuquerque office. And they're going to work up a full estimate for you. It'll be mailed to your home address. And the one thing you want to remember when you receive this estimate is that all the amounts that you're being shown are pre-tax amounts. So they're gross numbers. You want to remember that you've paid in pre-tax to your contributions throughout your career, anytime after July 1st of 1982. And so when you retire, taxes are inevitable. So you'll have state and federal taxes that you'll need to deduct. So those are not reflected in these estimates. Just remember that. So with the estimate, this is an example of what you'll receive. And at the top, you'll have your member information, which is your name, your date of birth, your social security number. We've whited all that out for presentation purposes. But then it has your age, and that age is at the time of your retirement. So this person requested an estimate for July 1st of 2021 in that next section. So they'll actually be 52 and a half on July 1st of 2021. And so as you look at that estimate, we have in the retirement information section, next to the effective date, we've got the final average salary. That's your high 5 consecutive years of salary averaged out into what we call the FAS, or final average salary. And then you have your total service credit, which is on the right-hand side, 25 years. Now that 25 years is going to be at that effective date, July 1st of 2021. So this person has, in the next section, the service credit breakdown. They have 24 years of earned service. And you can see that this estimate will include 1 year of additional service. So they're still earning that service right now. Over to the right-hand side, the estimated purchases, you can tell they didn't purchase anything. Now, if they had purchased, their purchases would reflect right there. And then down in the beneficiary information, again, the name, date of birth, social security number of your beneficiary, that's all whited out for privacy purposes for this. But the beneficiary is going to be 54.25 on July 1st of 2021. So the next section is going to be calculated, and it's taking in account for your B and C options, it's taking into account your age at retirement and your beneficiary's age at retirement. That's all calculated in. So we drop down to the benefit information, and we have the final average salary, which here is the $69,193.04. We are going to multiply that times the total years of service, which is the 25 years, times the pension factor. Now, this estimate uses the pension factor that tier 1, 2, and 3 use, which is the 2.35%. We multiply those together, you receive your gross annual benefit. We move that down to the next line, we divide it by 12, and that's your unadjusted monthly benefit. We move that down to the next line again. Now, this person, because this is a tier 1 person who actually is going to retire has asked to retire with the 25 years, they do not have an age reduction. So you see that unadjusted monthly benefit multiplied by the factor. Now, if you are going to retire under the rule of 75 or the rule of 80, you will have a different factor there for your age reduction if you're under those age reduction rules. And then we multiply that, come up with your adjusted monthly benefit. So now that's what we actually call option A. So we're moving down to the next section. Under option A, that's the highest amount available for your lifetime. But as you see under the beneficiary column, you have zeros. So there is not a lifetime benefit for your beneficiary. At that point, your beneficiary is called a refund beneficiary. So under option A, you have the $3387.58. And that's going to be a gross number. So less your taxes, you'd receive that every month the rest of your life. When you pass away, it ends. If there's any personal contributions that you had put into the system that have not yet been paid out to you, there'll be a one-time refund to your beneficiary. Otherwise, hopefully we're paying you for a lifetime, a very long lifetime. And when you pass, it ends. Now with option B, we have the 3158.58, and that is going to be take a reduction from A. That's taking into account your age at retirement, your beneficiary's age at retirement. So you would receive the 3158.58 every month the rest of your life. If you pass away, then your beneficiary receives the same amount every month the rest of their life. Option C, you'll see that the 3269.01 is actually a little higher than option B, but it still takes a reduction from option A. Now with option C, you'd receive that amount, less taxes monthly the rest of your life. If you were to pass away, your beneficiary would then receive half of that amount, the 163.4.51, every month the rest of their life. So that's the 50% option. And so we're going to go into a little bit more detail with your retirement options. So again, after we've gone over that estimate, option A is going to be the highest amount monthly that you can receive for your lifetime. And you have a refund beneficiary, not a lifetime beneficiary. This is the only option because of that refund that you can have multiple beneficiaries or actually leave your benefit to an estate, charity, or organization. Now, option B, this is what we call a 100% matching option. So you do take a reduction from option A. However, your beneficiary will receive the same amount every month the rest of their life once you pass away that you had been receiving for your lifetime benefit. Now, there are age provisions for this for a non-spouse. So with option B, you can use a spouse of any age, or anybody that is older than you, or anybody that's within 10 years younger than you, if it's a non-spouse. So for example, if you wanted to leave your beneficiary as an adult child, they would not qualify for option B because they're more than 10 years younger than you, but they could qualify for option C. Option C is for anybody of any age. So again, that is calculated from your age at retirement and your beneficiary's age at retirement. It is reduced from A, but it's higher than B for you as the member for your lifetime. When you pass away, your beneficiary receives half, 50%, for the rest of their life. Okay, so now that you've looked at your formal estimate and you've decided, I think I'm ready, I want to pursue this, what we want you to do is consider several other pieces of information so that you can make a really well-informed decision about when you should retire. And so we've always said that just because you are qualified, it may not necessarily mean that you should retire. It's very personal. Everyone has different circumstances. So, but we do want you to all look at the same pieces of information when you're making that well-informed decision. So basically, you want to look at how many years you have. Are you taking an age reduction? If you're going to retire under the rule of 75 or the rule of 80, and there's no circumstances that are pushing you to retire, you're healthy, you enjoy your job, you love what you're doing. If you can work longer, the longer you work, the better it is. With that age reduction, you can actually either reduce it by working longer or get rid of it altogether. And in any of the options that you retire in, or in any of the tiers that you retire under, you want to remember that the longer you work, the more your pension is going to be. So the higher your pension. We don't have a max out. You can actually go over 100%. 100% is about 42 and a half years. And we do have people that work longer than that. So that, again, personal choice. You want to look at what your healthcare options are and the cost of those options. So a lot of our employers that are the K through 12, they actually pay into New Mexico Retiree Healthcare Authority. And they're paying into that as they are making contributions to us. They're also making contributions to retiree healthcare. So that is their option when they retire. Now, some of our higher ed employers, like UNM, they actually have their own healthcare system. So you'll want to look into the healthcare system, whichever option you have, or even if perhaps you're married and your spouse has coverage for right now and they're still working, you want to look into those healthcare options, see what your monthly premiums are, take that estimate, and remember, you're taking the estimate less taxes, less whatever your healthcare is going to be as far as what's going to sustain you monthly in your retirement. And then you want to consider your personal finances. Look at your savings, look at your property. Do you have asset? What are your assets? Do you have debts? A lot of our information on retiring that you see out there just in the open market is to pay down your debts before you retire, because you want to remember that retirement can absolutely be great, but life does not stop in retirement. So there's still that roof you need to fix or a plumbing emergency. So you want to make sure that you've got everything covered and your amount is going to sustain you through your retirement, and so that you're comfortable in your retirement. You also want to contact Social Security. So we do not cover Social Security, but they have a great website, which we'll share with you at the end. And you can look at the eligibility and what your payment amounts would be. You want to remember that if you have gone into Social Security and signed up on their website for their statements, you want to remember that to read everything and see that amount that they're showing you, what your monthly amount will be, You want to look and see, is that if you continue working until 62, 65, 67, you want to really look into Social Security and understand that, how it's going to work in addition to your pension to sustain you in your retirement. Okay, so now you've done all of that. You've taken stock, you've made your pros and cons list, and you're ready to go. So now once you're ready, what you'll want to do is submit your retirement application. So with the retirement application, you will typically get that from your employer if you're still continuing to be employed right now. If you have been out of work, out of the ERB system for more than 90 days, you can get that on the website, and you will not do page 2, but all of you that are working currently, you're going to have 2-page application, and you're going to get that again from the employer. You fill out page 1. The top half is all your information, everything that you already know. And then the bottom half is going to be where you're going to insert your beneficiary. And so right now, when you're working on this application, you're not choosing your A, B, and C. That choice comes later in the process. So what you're asking for is to have your benefit calculated for your A, B, and C with that beneficiary. And so you may not be sure at this point what option you're going with, but please, if you're considering a beneficiary, please do include them on that application up front, because when this gets calculated, all the information will be mailed to you at your home address. Now, if you did not ask for a beneficiary calculation, you just asked for option A, you left the beneficiary blank, then before you retire, if you decide, you know what, I really want to see a B or C, then you're going to have to resubmit for that. It's going to cause just a lengthening of your process, and we don't want to do that. So just ask for it right up front. You're not obligated to it. You're just asking for information right now. So with that page, you'll fill that out, give it to your employer. Your employer is going to fill out the second page, which is the employer certification, and they're going to certify your wages for the next 90 days. Now, please be aware that we are starting a new system called DocuSign. Only a few employers are using it now, so if they're using that, they'll notify you, and it's just a little bit different way to apply, but the pages are the same. And so once your employer has those 2 pages, you also want to supply them with your proof of age, which you only need one proof of age, either a photocopy of your birth certificate, your driver's license, or a current passport. There's other options on our website in the application section of the website under active employees. And then you've got also a proof of age for your beneficiary. So if you asked for a calculation, you listed a beneficiary, you also are required to turn in a photocopy of either birth certificate, a driver's license, or a current passport, or one of the other options on the website. And so you'll want to make sure that your employer turns all 4 of those pages in together. They need to go in as one unit, and those will be sent in typically by your employer. They send it into NMERB. And so now, to take you through the rest of the retirement process, I would like to introduce Selena Herrera.
Hi, I'm Selena Herrera with the payroll specialist lead with the New Mexico Educational Retirement Board. I'm going to go over your final retirement packet that you'll receive in the mail, highlight all of the important information, important documents that you need to get back to us so we can get you placed on payroll so you can start to enjoy your retirement. You will receive a packet of documents about 30 days prior to your retirement date. So please, check that out, look for it in the mail. In the meantime, during the time that you submitted your application for retirement and you're going to receive your final documents, please, if you moved, please make sure that you get your updated information to us so we can make sure that your paperwork gets to you in a timely manner. Once you receive it, you'll definitely want to take some time to go over it, make sure that you understand, you look at all of the options before you make that final determination. You will receive a final selection of benefit form. This is where you will select which option you'd like at retirement, whether it's option A, B, or C. This is where you'll also see your total, your option A benefit amount, your option B, your option C. So that way you can see, where you're at. Now, if you did not request an additional or continuing benefit for a beneficiary, you may not see all three numbers. You may only see an option A benefit amount. So once you've determined which option you'd like to retire under, please be aware that this is the final retire. This is the option that you choose, and this will be what you have throughout your retirement. Once you've decided, you just need to complete the form. There's two separate parts on the page, so depending on which option you choose, you'll either fill out option one as part one as an option A retiree, or part two if you've decided to go with B or C. Please make sure that you complete the correct section. If you make a mistake, please let us know so we can get you a new form. Do not use any whiteout on this form. It will not be accepted. So as an option A retiree, you would complete section one with your beneficiary for that final payment amount or the bucket amount if unfortunately you pass away before you can expend all of your benefits. And this is where you and your spouse, if you're married, will sign in front of a notary. You need to make sure that you sign that paperwork in front of a notary. If you choose to go with option B or C, you're going to fill out part two with your beneficiary information already being preloaded onto that form. Once again, if you are married, you and your spouse will need to sign in front of a notary. Additional information or additional paperwork that's in the packet that's very important is your authorization agreement for direct deposit services. Direct deposit is required. This saves you basically because you will get your benefit a lot quicker than waiting for it to come in the mail. Your bank needs to fill out the form, so you basically would fill out the top portion of the form. Your bank would fill out the bottom portion of the form. Plus, you also need to make sure that you include either a voided check or a direct deposit form that the bank gives you. This just makes sure that all the information we have is correct, so when it is time to pay you, we're putting it into the correct account. The next important form is the federal and New Mexico tax deduction form. Be aware that this is taxable income, so you may need to make sure that you're paying taxes on it. However, we cannot give you any tax information, so you will want to get with your tax professional and find out exactly what taxes you should have deducted. So you definitely want to make sure. Now, even if you choose not to have any taxes deducted, you will need to still continue completing that form. One other thing to be aware of is ERB is only allowed to withhold taxes from the state of New Mexico. So if you live in any other state, you will need to work with your tax department in order to make sure you get your state taxes paid if they do have state taxes. The next form that you will need to review and sign is the permanently reduced rate calculation notice. If you retire and you do have that permanent deduction, there is a form that you will need to sign and return. The last important form is the returning to work after retirement notice. You definitely want to take some time to read that over and make sure that you understand what happens if you choose to go back to work, whether it's for ERB or not. If you choose to go back to an ERB employer, you definitely want to know what entails with that because you don't want to have your benefits suspended. Make sure that you return all of your forms to us as soon as possible so we can get you placed on payroll. There is a deadline in which to have your payment or your paperwork back to us. For example, if your retirement date is October 1st of 2020, you need to make sure that you have all of your paperwork to us by September 30th. This will avoid a delay in getting you placed on payroll. If for some reason that deadline is not made and you do not make payroll for that particular month, you will make payroll in November and receive 2 deposits for that month, the one that you should have received in October plus your November. So you're not going to lose out on any benefit amounts, but you will have to wait an extra 30 days before you get paid. So you definitely want to make sure that you get your forms back to us in enough time so we can make sure that everything is filled out correctly and get it to myself in payroll so we can get you placed on payroll. Once you are on payroll, be aware that it is a monthly benefit that you will receive on the last business day of every month. So it's always going to be the last business day. It's not going to be the last Friday, every third Wednesday, anything like that. It's always the last business day of the month. So, be aware that the deposit you receive at the end of, say, October is for October. So, definitely make sure that you're aware that it's a monthly benefit. It's not every 2 weeks, anything like that. Some of you may retire with both ERB service and para service. So if you do have any kind of para service and you get a benefit from them, it will be a completely separate benefit from us. So you'll actually receive 2 separate deposits at the end of the month, one from ERB and one from para. So if that is the case, you will actually receive separate documents for para for their direct deposit and their taxes. The forms that we have are different from para, so you need to make sure that you complete both of them so you can get your direct deposit in a timely manner. One other important note is any changes that you need to make on your account, whether it's an address change or a direct deposit change, anything like that, you need to let us know as quickly as possible, especially when it comes to your address, just because we want to make sure we get you all of the paperwork out, especially your tax forms, your 1099-Rs. We definitely don't want to have a delay. So, when it comes to your taxes, you're waiting or scrambling to figure out how to get that. So, any changes that are necessary, please let us know. You do need to let us know in writing. We do require a signature. So any changes that are done, give us a call. We'll get you the forms mailed out. The forms are also available on our website. So, it's there available for you to get that information to us as quickly as possible. All retired members are eligible for a cost of living increase, and it all is based on your age. So the first cost of living increase that you will receive is the year you turn 65. And that will happen, the increase you will see in July. So the year you turn 65, as long as you have been retired for a year and you fall under a tier 1 or a tier 2 or a tier 3, you will get your first COLA at 65. If you are a tier 4, your first cost of living will be given at age 67. So be aware. So if you retire, and when you're 55, you still have quite a few years before you get that first cost of living. That is there for you. I guess it's something to look forward to when you're retiring. So just always remember the magic number is 65. If you have any other questions after retirement, definitely reach out to us in the payroll department. We're here to help you. Any changes, like I said, that happen on your account, if your beneficiary passes away, definitely let us know. We want to make sure that we're giving you the most information and the most benefit, as you retire, because obviously this is very important for all of you. I am now going to turn everything over to Rod Ventura. He's going to go over some additional information.
Hi, I'm Rod Ventura. I'm the Deputy Director of the New Mexico Educational Retirement Board. And after you ease into retirement, I, on behalf of ERB, really do hope that you enjoy your life after retirement. At this stage in your life, you've probably worked a long career and you deserve some time off. Now, some of you, for whatever reason, may feel the need to return to work after retirement. And I want to go over with you the rules for returning to work after retirement. First, you have to know that the Educational Retirement Board and the pension plan it offers is what they call a 401A plan under the IRS code. And how that affects you in regards to return to work is that the IRS typically doesn't like people to receive an ERB pension and work for an ERB employer at the same time. If you receive a pension and get a salary at the same time, the first reaction is to suspend your pension. But there are 3 different ways that you can return to work under the Educational Retirement Act, and let me go through them with you. On this slide, you'll see that the first way to do this is through the formal return to work program. In order to participate in the return to work program, you need to fill out a return to work application, and then you need to lay out from work for 12 consecutive months after your retirement date. If you've laid out those 12 consecutive months and you've submitted that application, you can return to work for an ERB employer and still receive your pension. And there will be no limitations on the earnings that you earn after retirement. However, you will have to make contributions to the ERB, as will your employer, if you participate in the return to work program. And those contributions are non-refundable. The second way that you can participate in return to work after retirement is if you work 0.25 FTE or less. Once again, if you're going to participate in this provision, you're going to have to submit a return to work application, but there is no layout period. So technically, if you retired on a Friday, you could come back to work on a Monday, as long as you return to work less than 0.25 FTE or less. So there is no limitation on your earnings, but there is a limitation on the FTE. So you have to make sure that you meet that limitation. Under this provision, you don't have to make any contributions, and neither does your employer. But if you do decide to work for multiple ERB employers after retirement, the FTEs are going to be combined. So we will aggregate the amount of work you do after retirement to see whether it exceeds 0.25 FTE or not. The third way that you can return to work is if you earn less than $15,000 in a fiscal year. Once again, if you want to do this, you have to submit a return to work application. And there is a layout period. You have to lay out for 90 days after your retirement date before you can work under this provision. So under this provision, you can earn less than $15,000 in the fiscal year. And we measure the fiscal year from July 1st to June 30th. You don't have to make any contributions, and neither does your employer if you earn less than $15,000. But once again, if you work for multiple ERB employers after retirement, we're going to look at all the work that you do and combine the earnings that you have. So for example, if you work for one ERB employer and you earn $13,000 and you work for another one and you earn $5,000, that's a total of $18,000 and you've gone over the limit. And in that case, your pension could be suspended. So you want to pay attention to these rules very carefully, because as Selena alluded to, if you go over or you break any of these rules, your pension might have to be suspended. This is a reminder that these rules apply basically when you want to work for an ERB employer after retirement. If you work for a non-ERB employer, say, for example, you want to work for the state government and work for a para-based employer, then there are no restrictions at all. I want to go over now some information that you may need, or some people that you may want to contact to help you out in regards to your retirement other than ERB. Now, Laura alluded to some of these contacts before in her presentation. The first one is the Retiree Healthcare Association. And a lot of her employees are eligible for healthcare under the Retiree Healthcare Association, but many higher ed employers are not. So before you contact the Retiree Healthcare Association, you may want to check in with your HR representative to see whether or not you are covered under retiree health care. If you are, then you can contact them through their website, www.nmrhca.org, or email customerservice@state.nm.us. Their phone number is 1-800-233-2576. I believe Laura also mentioned the PERA, and Selena might have mentioned them as well. If you have service credit under the PERA, you may want to touch base with them, because we may not have the information you need to know. Their website is www.nmpera.org, and they can be contacted at the website paramemberservices@state.nm.us. Their phone number is 1-800-342-34 22. If you want to contact the Social Security Administration, of course, they are a federal agency, so they can be contacted at www.ssa.gov or at 1-800-772-1213. For tax information, you're going to want to contact the IRS, of course, at www.irs.gov. Or if you want to find out about state taxes, you can contact the New Mexico agency, the Department of Tax and Revenue, which is located at www.tax.newmexico.gov. Here are some contacts for ERB if after this presentation you want to contact us further and ask some further questions. This is also a reminder that this presentation will be posted on our website, so if you want to go back through some of the information we've given you today, you can check out our website. Our website is www.nmerb.org. And alongside this presentation, there's a wealth of information there, including some of the things I talked about, the return to work applications, other forms, direct deposit forms. You can check them all out on our website. You can contact our member services people at member.help@state.nm.us, and they can answer your questions via email. Or if you want to call us, our number is 1-866-691-2345. Now, I've listed here on the slide our address for the Santa Fe office and our Albuquerque office, but I want you to know that now during the COVID-19 crisis, we have our offices closed to the public. So you can come by our offices, and we do have drop boxes outside each of our offices where you can drop off documents. But if you have questions, the best way to contact us will be through either the email or the 1-800 number. I want to thank you very much for your time today and learning about your retirement and figuring out what to do. And once again, on behalf of all of ERB, we hope you have a really happy retirement. Thanks a lot.